Alright, so I had a lot of requests on making a intro to futures to people that actually want to start futures and just learn it. So I'm gonna kind of go over the broad topic of it, and then if you guys do want to see more like in-depth broken down futures videos, I definitely will. I most likely will turn this into kind of like a free course guide kind of thing. So basically, with futures, you're trading the straight NASDAQ and the straight S&P 500. Now, there's a few different ways you can trade them. Um, so basically, you can either trade them through brokerage account, which you open a separate account and you fund it. So you fund your own margin. So usually the minimum is 500. So you would just put 500 bucks in, and that'll give you enough to actually trade two E-minis, which are about 170 each. So whenever you take a loss, it actually just comes out of that margin. So unlike a normal margin account where you would need to fund at least 25,000, you don't have to have that much. So that is one of the beauties of future is the leverage. There are pros and cons to that, obviously, but one of the pros is you don't need much money to start. The leverage will allow you to make your small investment into a lot once you're comfortable, you understand the baby steps, and you kind of start to get your bearings and start thriving in the futures market if it works for you. Um, Another thing is one of the cons, obviously, would be you're limited to just the Nasdaq and just the S&P 500, but there's a few caveats to that. One, you're just focusing on one chart, which can give you a lot of peace of mind instead of surfing through hundreds of stocks. Um, you're just going to focus on one chart, one setup, and be done. So that the simplicity brings a lot of ease to most traders, and for me even, I've found a lot of peace just being able to trade one or two stocks, being the S&P or the Nasdaq. So basically diving into it, I'm looking at the NQ E-mini Nasdaq 100 futures. So basically, E-mini is going to be the smallest one. Okay, so anything that has E-mini, micro. Sorry. Let me actually pull this up. So there's the E-mini is actually going to be the big one. So its leverage is 1/10 of the actual Nasdaq price. So every dollar is $27 per point. It might be a little bit less than that. So, but I know it's in the 20s. M&Q, which is the micro E-mini, which is the one I was confusing with. So sorry about that, guys. Um, it's $2 per point. So would you have I wouldn't recommend trading the straight NQ unless you had a brokerage account size of 30 to 50K. If you have 500 to about 15,000, you can make a lot of money off just trading the micro E-minis, which is $2 per point. So let's say we're at 874. So if we go to 875 and you have one micro E-mini, you're gonna make $2, right? If you had the big one, which is just the mini, um, you're gonna make, $27 per that point, right? So that's just one, right? So the one you want to be trading is the micro E-mini. So you want to be trading the micro on both of these. That goes for both of these. Um, the micro E-mini on the S&P 500, sorry about that. The micro E-mini on the S&P 500 is actually going to be $5, obviously because there's less volatility. I will say ES seems to be more directional than NQ, but NQ you're obviously going to have those bigger ranges to play, right? So there are pros and cons to both of those, but in my experience, Nasdaq, I would say you get an average of 300 point move per day. Um, let's say you had 3 MNQ, you would only need a 50 point move to make about 300 bucks, which is more than enough, right? So you don't need necessarily a big move, you just need to capture the moves in between the ranges. So that is how the contracts work. So I'll go over it one more time. So you'll go to, I'm just on, oops. So micro E-mini is the small ones, the ones you should be trading if you're under 50K. If you're above 50K, I would trade the bigger ones. It gives you more leverage. M and Q, the micros, you can definitely scale in more and start selling at key points. So that is the beauty of it. Because if you have 5 of these, that equates to 50 of these. So you could definitely just, maybe sell 10 every 20 points, stuff like that. Um, so that's just the basics of the essence of it. One thing I will kind of go over as well is strategy. I just use basic support and resistance. Um, Asia high, Asia low, London high, London low, New York high, New York low, the prior day high and prior day low. I also do use these EMAs as a trend flip, or I use them as you can see, if you're taking the short side, you're just following the trend until the trend breaks or fizzles out, or you hit your TP. Um, Definitely recommend having the EMAs for that. One thing I would say as well, I've noticed the first 30 minutes are usually pretty exaggerated. If you wait after 30 minutes, you're going to get a bigger move normally. You can kind of see it here. We started to reject lower after about that 30-minute mark. So always wait for that 30-minute mark. If you do see chop, you're going to be able, especially if you're looking at one chart all the time, you're going to notice like, hey, we're choppy more. Like on Tuesday, you can see like, hey, we're below this previous day high. Um, we're still above this previous day low. You can see for the first couple hours we were choppy until we started to break below the yesterday's ranges. So it is nice to have that into consideration and be like, okay, looking at one chart, you kind of already understand like, hey, it's going to be choppier. I shouldn't put a trade on until one of these levels break. So that is a one of the many pros. Um, but yeah, basically, I just wanted to go over the contract sizing and just yeah, um, and a little bit of my strategy. I did make a video on the strategy already, but I did have some questions on the contract sizing. So yeah, definitely um, size down. You always want to look for a 2-to-1 risk to reward ratio. I would always look for a stop loss of 20 to 25 points. So if you're looking to size up, I would say don't size up. Maybe just let your trades run longer and keep your same risk. I think having a bigger stop loss is always more important, especially on the NQ. So yeah.